Okay, students, now we're going to talk about a petty cash fund. A company would typically use a petty cash fund to pay small amounts which they need to pay pretty quickly, and they don't want to go through the process of getting a check actually written. The petty cash fund is typically kept in a petty cash drawer, which is a locked drawer. And what you would have to do to establish the fund is to have a check written to the petty cash cashier, who would then take the check to the bank, cash the check, bring the cash back, and put the cash in the drawer. Then, as money is paid out of the petty cash fund, the individual receiving the cash would sign a voucher or a receipt, and that would be put into the petty cash drawer. At all times, what is in the petty cash drawer, whether it be cash or receipts, should together equal the amount that's in the general ledger petty cash account. So what we're going to do today is talk about the entries that we would have, the journal entries we would have in order to establish and maintain a petty cash fund. Okay, the very first thing you would have to do is to establish the fund. As I said before, you would write a check, you would get the cash, put it in the drawer. The journal entry would be a debit to petty cash. That would be a general ledger account, petty cash, and a credit to the general ledger account, cash. Let's say we're going to establish a fund for about $900, okay? So we'll debit petty cash for $900 and we'll credit cash for $900. When that journal entry is posted, it will go into the general ledger account. We'll use a T account to represent that account. It would go into that account as a debit. Okay? Alright, then another time that you would make an entry to the general ledger petty cash account would be if you wanted to decrease the fund. Let's say that we decided $900 was too much. We really needed about $500. Okay? So we're going to decrease the petty cash fund by $400. To do that, we would take the cash out of the drawer, make a deposit, and then we would make an entry to increase cash with a debit and decrease petty cash with a credit. Okay, and we said $400 would be the decrease, bringing it down to $500. When that entry is posted, that would be a credit to petty cash, bringing our balance down to $500. Okay, so that's the entry you would have to decrease the fund. Then you go a little bit further and you decide, hey, $500 isn't quite enough. We really need $800. So we want to increase the fund. Now we need to increase the fund by $300. Okay, so to increase the fund, we would have a check written. We would cash the check, put the cash in the petty cash drawer, and the entry would be the same as what we have here, a debit to petty cash and a credit to cash. That's on the general ledger. And that was $300. When we post that entry to the petty cash account, that will be a debit here, giving us now a balance of $800 in the general ledger. Alright, there is one other time that you would actually make an entry to the petty cash general ledger account, and that would be if you eliminate the account entirely. In order to do that, we see that we have $800. We take the $800 to the bank, make a deposit. We're going to increase the cash general ledger account and decrease petty cash down to $0. And that will be a debit to cash, credit to petty cash for $800. And that credit to petty cash here will bring that account down to $0. Now, I show you these four journal entries to emphasize a point. These four times, or these four transactions, or types of transactions, are the only time that you would actually make an entry to the general ledger petty cash account. I will show you how to replenish the fund, but to replenish the fund, you're not going to be actually making a general ledger entry to the petty cash account. The entry will go to either expense accounts or asset accounts, depending on what the item was for. Okay? So now I'm going to erase the board here. And I'll erase the balances here. Okay. Looks like I might need a little bit more help here to get this board clean. Let me make a quick spray here, get this off the board, and then we'll proceed. Sometimes the eraser is not quite enough. Okay. What I'm going to do to demonstrate how to replenish a fund is to work exercise 824. Okay? So let's look at that exercise. Exercise 824 first says to journalize the entries to record the following. Check number 33694 is issued to establish a petty cash fund of $900. So we want to make that first entry. We're going to be debiting petty cash and crediting cash for $900. Now that entry, of course, because we are establishing the account, does go to the petty cash general ledger account. So I'm going to come over here and show that debit of $900, and that's what's in the general ledger petty cash account. Okay? All right, the next thing that happens, it says the amount of cash in the petty cash fund is now $70. All right, we know that we need $900 in the petty cash fund. We only have 70, so we're going to need a check written to reimburse the petty cash fund for $830. So we know that is a fact. Now we're going to take a look at what else we have in that drawer. We should have vouchers or receipts to make up the difference. And we're going to actually debit the accounts that we use those vouchers for in order to pay those small bills. The first thing we have is office supplies. Okay, so we're going to start our journal entry now. We're going to debit office supplies, which is an asset account, for $525. That's the amount of the voucher or receipt that's in the drawer. We have a voucher for miscellaneous selling expense. Debit that account. That is an expense account, and that one is for $190. Okay. Then we're going to we have a voucher for miscellaneous administrative expense. We're going to debit miscellaneous administrative expense. I'll abbreviate here, running out of space, and it is okay to abbreviate as long as you're using an internal document and not an external document. The amount of that voucher or receipt was $85. Okay, and those are the only three vouchers or receipts that we had in the drawer. We know that we're going to write a check and therefore credit cash for the amount to get our cash back up to $900, and that's $830. What we want to do now is to add up our vouchers and see if we have $830, and we see that we do not. We only have $800 if you add those together. Okay, so we're short $30, and we're going to use a short and over account. It is normal for us to have some shorts and overs because we as humans make human mistakes. So therefore we may have some shorts and overs as when we're dealing with cash, as we deal with cash. So we see what the difference is, and we see that it is $30. And we are $30 short. We could be short, we could be over. We're going to use that cash short and over account whether we're short or whether we're over. Since we are short, we're going to need to debit it as we would an expense account or a loss. So we're going to debit cash, short, and over for $30. Now if you add up all of the debits, they should be $830. You get the check written for $830, you cash the check, put that cash back in the drawer, and now you're back up to $900, which is what you have in the general ledger account. You debit the accounts for all of the receipts or vouchers that you have, and notice here that there is no entry to the general ledger account petty cash. That's a very important point that I wanted to make. Okay? These are the entries that you would have, the ones that I showed you earlier, and this one that you would have associated with a petty cash fund. In the next video, I will talk about a change fund. If you have any questions, let me know.